Welcome back. Remember, we are still busy doing the financial statements. Note to the financial statements, note number 3 for fixed assets, as well as the income statement. So we are still busy. When we went to the break, we were busy doing the question on income statement from November 2011. Question 3. Okay, let's go back. We were here. We're doing bad debts. Now, if you check there, remember we said you check first the trial balance. We're having amount of bad debts from the trial balance, 12,000 as given from the trial balance. Remember, we also check we also said you must first check if there is any adjustment. And we saw there is adjustment on the bad debts, adjustment D. It says a debtor who originally owed 32,000 has been declared insolvent. His estate paid 40 cents in every rand. So it means a debtor was owing us 32,000, but his estate paid only 40 cents in the rand. So we are not interested in the 40 cents because the 40 cents was paid. But when we deal with bad debts, we are only interested in the amount that was written off. So it says the remaining balance must be written off. It means out of the 32,000, only 40 cents in a rand or 40 cents in every rand was paid. So it means the remaining. So you must check there, every rand. In a rand we have how many cents? We have 100 cents in a rand. But how much was received or how much was paid? His estate paid only 40 cents in a rand. So we are left with 100 minus 40 equals to 60. It means we are left with 60 cents. That is the remaining balance that must be written off. So let's check. If we calculate, we'll say, let's check there, we'll say 32,000. We'll say 32,000 multiplied by 60 over 100. Remember, 60 cents is the same as 60 over 100 because they say 60 cents in every rand, and then we'll get 19,200. So the 19,200 represents bad debts, the remaining balance that must be written off. So if we check our income statement, then we'll have 12,000. We'll have 12,000 for bad debts plus 19,200. That was calculated. So if you add the two, you'll have to add 12,000 plus 19,000. Let's add quickly. 12,000 plus 19,200. It will give us 31,200 for bad debts. Remember, you start with the amount as given from the trial balance. Now after that, we had a space here, so we must check which accounts other expenses are not covered on the trial balance. That must also become part of the operating expenses. All right, if we check now adjustment number A, it says a physical stock taking on 30 June 2011 revealed the following trading stock, that is the trading stock on hand, the following inventory on hand. So we have trading stock on hand 902,150. So we must calculate either is it a trading stock deficit or a trading stock surplus. If you check information from the trial balance, according to our records, trading stock on hand is 955,000 from the trial balance. According to our books, on the record is 955,000, but the physical counting of stock revealed that it is 902,150. So it means there is a shortfall, there is a deficit. Then you'll say 955,000 minus 902,150. So you easily take the amount from the trial balance minus the amount from the adjustment to get our bad debts. So trading stock deficit, sorry. If you calculate trading stock deficit, we'll calculate it there. 955,000 from the trial balance, minus 902,150 from the adjustment. So we'll get our trading stock deficit as 52,000. Our trading stock deficit as 52,850. Now the next account, we have depreciation. We must also check the adjustments. Must check the adjustment if we have anything on depreciation. If you refer to adjustment G and H, it says a vehicle was sold on credit for 90,000 on 31st December 2010. The fixed asset register revealed the following regarding the vehicle. So that is the information. H, make provision for depreciation as follows: vehicles 15%, equipment 10%, and the new equipment was bought. Remember, when we are dealing with the node to the fixed asset, we calculated depreciation, and then we also said this is some of the things that you must also check. When you calculate depreciation, you must check the method, we must check the rate of the percentage rate of the asset, as well as the lifespan. And we also said you are going to calculate depreciation on the new asset, on the sold asset, and the old equipment or the remaining equipment separate. So let's check. If we refer to information G, we have the asset that was sold. It says a vehicle was sold for 90,000. So 90,000 is our cost price, the selling price. So we are interested in the sold asset. They say it is how much? 235. So the asset that was sold, 235. So we must check the 235. What is the method of calculating depreciation? It is there. They say it's the cost price. The cost price 15% per annum on cost price. So we'll say 235,000. We also need the rate. It's 15%. So we'll say 25,000, 235,000 multiplied by 15 over 100. But we must also check the lifespan of that asset. Did we have it for the whole year, or what happened? Now if you check there, they say the vehicle was sold on credit for 90,000 on 31st December 2010. So we must check the accounting period first. We said our accounting period, remember when we are calculating the rent adjustment, we identified our accounting period from the 1st of July 2010 to 30 June 2011. So we must check there. They say the asset was sold when? It was sold on 31st December 2010. So we must count. So if you check our accounting period there, we'll draw it again. 1st July 2010 to 30 June 2011. The asset was sold on 31st December 2010. It's there, 2010. So we're having the asset from there up to there. So you must count months: July, August, September, October, November, December, January. December. So it's 6 months. July, August, September, October, November, December. So we had that asset only for 6 months. So we must calculate the depreciation. We'll say 235,000 multiplied by 15 multiplied by 6 over 12 to get our depreciation. 235,000 multiplied by 15% multiplied by 6 divided by 12, because it lasted only for 6 months. So we'll get the answer as 17,625. So remember, 17,625 is depreciation on the sold asset. So when we record, we'll simply write in brackets. We'll simply check our answer sheet. We'll simply check our answer sheet there. Depreciation, we have 17,625 plus the unsold ones. So this is only depreciation of the old sold asset, the asset that was sold.